Thursday, December 17th, 2020, Maneco 64, home of alternative economics and contrarian views. Yes, the dollar is sinking versus all other currencies at the moment. But what I want to tell you today, and this is important because you must not fall into the trap that other fiat currencies are a good hedge versus fiat money inflation or fiat currency inflation. I've been talking about this for over 10 years. I wrote an article, many of you probably know about this, back in 2007, talking about how all fiat currencies are sinking. And the analogy I would use is if you're driving along on the motorway or highway and you're driving really fast and you look at the cars who are driving slowly, it looks like they're going backwards because you're going so fast, you're going past them, but they're also going forward. But the illusion is that they're going backwards. And that's what I have to say about fiat currencies. Right now, the dollar is sinking faster. Back late last year, the pound was sinking faster. And it was sinking even faster versus gold, of course. But in the end of the day, what we need to know is that all these fiat currencies are going to sink versus gold and silver, versus real things, versus commodities. We've been looking at how commodities, and I've been saying that commodities are the most undervalued for over 120 years. I've been going on and on about this for the last few months. And it's not just me. It looks like even the vampire squid, aka Goldman Sachs, is also trumpeting a commodity bull market. There's an article here on Seeking Alpha yesterday. Goldman is trumpeting a new secular commodities bull market, and investors should listen. And they say here, Goldman Sachs is now on board and now sees a new secular commodities bull market that exceeds 2000 to 2008 commodities bull market. So there you go. Exceeds. That was a huge bull market in commodities, a huge bull market in precious metals. Not only did we see gold go from 250 to 1,000 by 2008, we later saw gold go to 1,900 in 2011. And that's the other thing that I wanted to talk about is that, yes, back in 2008, that was when the dollar bottomed because the commodity bull market ended, right? Dollar bottomed at 70.69. And despite that, gold still went to 1920. It's called a flat correction. And I've spoken about this before as well. And there's analyst. He's probably in his early 90s now, and he's called Ron Rosen, and he's spoken about a flat running correction, and it's a very rare occurrence in the markets. It basically means that the trend from where the particular asset or commodity corrects is so strong that the correction actually takes the market higher when it's correcting from a bull market, which is crazy. And that's what gold and silver did. Basically, gold went to 1,000, from 250 to 1,000 in the 2008 bull market. The dollar bottomed in 2008 in March of that year, just like gold, at around 1,030. Then gold corrected to around 680, but then it went up to 1920. So the correction ended there, and that was a correction for a bull market. And yes, we came back down in 2015, end of 2015, just above the previous high. So it's been a huge correction, like flat correction, which is really positive. And so, for example, the dollar let's, for all intents and purposes, say that it also topped this year in March, even though in January 2017 it topped at the same level. But so the dollar topped around 103, the dollar index, and gold was around 1450, 1500. So can you imagine when the dollar accelerates even lower versus other fiat currencies, how much higher gold will go, and how much higher gold will also go in terms of those fiat currencies. So what I'm trying to say here, yes, don't get fooled into the trap that the dollar, it's only the dollar that's going down. Yes, it is going down quicker right now, or sinking quicker than the euro, then the pound, then the yen, then the yuan. But those currencies are gonna catch up with the dollar in terms of losing value versus real things. And Goldman Sachs, though, and Wall Street, they see this as a signal of strong economic growth picking up and people needing commodities. I'm not too sure. I think in real terms, it doesn't mean economic growth. It means more and more kind of economic malaise, so to speak, in real money. Because if we look at the price of the Dow, for example, in gold, we topped basically in the end of 1999, 2000, above 40. You needed 40 ounces of gold to buy one Dow. And I think that's what's happening. You'd be surprised to hear me say that. We're having a deflationary collapse since 2000 in real money. Of course, in funny money, it will look like a boom time, but people are going to get worse off and worse off as this bull market in commodities, precious metals moves on. The people at Goldman Sachs, of course, and their clients will do well. That's what always happens. The very wealthy do well from inflation, but people have been confused so much about what inflation is, what you measure really against. And I would say the ultimate measure, yardstick of value is gold. And it has been for over a couple of thousand years. Yeah, don't get trapped into the fallacy that the only way to protect your savings, and by savings, I don't mean investment, I mean monetary savings. If you hold your savings in fiat money or fiat currency, which is a better term really, that currency is going to really not hold its value. So Wall Street and the central banks, what do they want you to do? Well, they want you to speculate even more in the stock market, maybe in commodities as well. But I think the safest place to be, of course, is precious metals, physical gold and silver. If you want to speculate, you can, but it's a dangerous game. You need to sit through ups and downs, just like we've been seeing the last few months in the mining stocks. So there you go. Let's quickly look at where the markets are this morning. It's just gone past 8 a.m. London. Just before I start, I just remembered something. This is from In Gold We Trust. I'll put a link to their report from earlier this year. And they've looked at, I would say it's more fiat currency performance. They call it gold performance because fiat currencies are measured really in real terms versus gold. But anyway, all you need to remember is that just to flip that number into negative so you can see how the currencies have done. So it's not just the dollar that's going to sink, as you can see. Since 2001, the euro has sunk on average by 9.7% every year since 2001, and it's going to continue. The dollar has done it at a rate of 10.7%, so it's sunk 1% more a year. The pound has done it by 12%. So those people who think the pound is doing really well versus the euro, well, look again. Actually, the euro is performed by 2.3% better than the pound on average. Aussie dollar 9.5%, not bad actually on average. Canadian dollar 10%. Chinese yuan 9.7. Even the Japanese yen, the land of deflation, right? Their currency is getting trashed as well, 10.1% a year. Swiss franc is the best performing currency versus gold, as you can see, 7.8%. It's still going down by 7.8% though. Indian rupee 13%. I think it was yesterday, and I had to laugh. The U.S. Treasury said that the Swiss are currency manipulators. Talk about calling the kettle, the pot calling the kettle black. I had to laugh about that one. The Swiss, if anything, they have the strongest currency, and the U.S. Treasury is saying that they're manipulating their currency. So let's see where we are right now. Yes, the Fed came out yesterday. Didn't change much. We had Mr. Powell in his press conference. Gold and silver dipped on the back of the announcement, but because some people were expecting an increase in the QE. But I can tell you, if things get hairy, so to speak, in the markets and the economy, it doesn't matter what they said yesterday. They're just going to do whatever they need. So, and I think that's what the markets realize, because the dollar dipped quite a lot after rebounding after the announcement. Jay Powell announced as well that he's going to keep the swap lines to central banks open temporarily till September next year. What does that mean? Well, that means when people or other countries have problems with their currencies, when their currencies drop too quickly, because businesses that borrow in dollar need to buy dollars, so they sell the local currency. That all it means is the Fed is going to provide more dollars to these people, to the other central banks, and all they do is swap. They basically create these dollar reserves and then take in euro reserves, so it helps them out. So you can see that Powell is not convinced that the dollar is going to be sinking forever versus these currencies, and that's why he's kept his swap line open. Is that negative for gold? No, as I said, gold is immutable. It's these currencies that are going to go down. So right now, let's stop talking and see where the markets are. It's 8:11 by now. And we've got spot gold at $18.75. It's up $10. We're right near the highs. Technically, short term, we've seen a pretty good move here, because let's see, on the 8th of December, which was Tuesday last week, gold had spiked to around the same level. So yes, it's going to be a bit of a resistance, but back then that level corresponded to the 50-day moving average, and technicians look at these moving averages a lot. And as you can see now, the moving average has gone lower, and it was around 1865 yesterday, which was the high around there, 1866. But now we've broken through the 50-day moving average. The next key level here is going to be around 1893, which today is the 100-day moving average. The moving average, of course, moves with time. And you can see here the orange line. That's the 200-day moving average, which is a very important moving average for the long-term direction of the market. In a bull market, you want to see the price stay above that 200-day moving average. We dipped below that 200-day moving average back in November and beginning of December, and now we're going back above that line, the 50-day. Now the 100-day is the next one. So that's where gold is. The range has been 1861 to 1875. Silver is doing well. The gold-silver ratio looks like it's starting a next leg down, which is a positive. In major precious metals bull markets and commodities bull markets, silver outperforms. Right now, silver is up 35 cents or 1.38% at 25.68. High has been 25.75. The low 25.14. Yes, I expect a lot of movement, a lot of volatility, even today. Usually when the US comes in, we see silver and gold dip. But the really important level now is 26. If we break through 26, I could see a lot of short covering and people piling in. Will it do it today? It's possible. The Dow futures up 0.4% at 30,288 or 123 points. S&P up 20 points or 0.5% at 3720. The Nasdaq 100 futures also up 0.5%. So yeah, the currencies as well, the fiat currencies are doing well versus the dollar here. We've got the pound up just under 0.5% at 135.73. We've got the euro up 1/3 at 122.36. We got the dollar down 0.25% at 103.18. And yeah, we've tested that 650 level again versus the yuan. Right now we're back above it at 650.90. Not surprisingly, the commodities are doing well as well. The other general commodities, high-grade copper is up 1%. WTI crude is up 1% as well. We're almost approaching $49. We're at $48.54. To finish off, let's look at the 10-year yield. It's at 0.93. It's up 1 basis point. But from when we last spoke yesterday morning, it's up about 3 basis points. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And if you do, make sure you hit that little notification bell to be notified of all my new videos. And you can also follow me on Twitter, Parler, and all these other platforms below here. I wish you all a great day. Take care. Bye.